Well, good afternoon, folks, and welcome to your Monday market review here at GoPro Trading with yours truly, Ian Giffen, after an interesting week. So I'm sure that many of you are relieved that we've had some high-quality price action start showing itself last week, and that the market is starting to get its skates on after a pretty dead December and leading, in fact, all the way, I'd say, from November through to the start of this month. Okay, so as always, the general theme for us is always quite important just to keep an eye on. And obviously, there's been a lot of jittery nerves in the market with what's going on with the Ukraine. Likewise, we're always waiting for that next bit of news coming out around the pandemic. You never know what bit of news is going to hit the market in order to start driving price in a reliable direction. That hasn't been the case for quite some time. We're hoping that what happened last week really is a forebear of what's coming, and that we are going to get some nicely biased directional movements in the market for the next couple of weeks. Certainly as high quality price movement traders, where we look to trade core strategies that rely on decent market movement, that would really boost our profitability early on in the year. All right, so starting as always with the Euro US dollar, here it is on the daily. Before I talk about the daily, let's just have a quick squiz of the weekly, where you can see that last week we finally did have a break and close below the preceding support level. And as price action traders, that is pretty important. Friday being Friday, there wasn't much happening. And today, of course, we're seeing typical Monday retracement behavior. Now, the question, of course, is what is price going to do as it comes back into this resistance level? And we don't second guess the market. Remember, that's not our aim and that is not our job. What we do look to do is see what the market is going to do as it starts interacting with this price level, which it started doing so far during the course of today. So should this be a simple retracement wave and roll over either during the latter course of today or during the course of tomorrow or Wednesday, then certainly we'd be looking to continue trading this in a bearish direction. So as you can see here on the daily time frame, not only have we had a breakout from our LPO range, but we are also outside of the HDC channel. So a couple of resistance levels for us to observe as price continues to come back into that area. All right, so in the meantime, though, we are waiting to see what happens. For those of you who are trading hybrid strategies, I'm sure you're busy watching that cyclicity on the lower time frame as we speak. Right, moving on to the cable here on weekly again, you can see that likewise we had a close below the HDC channel, but certainly not below the preceding support level that was established during the course of the last quarter. So not nearly as much action happening here, and certainly we're not nearly as interested. But if you are a channel trader, bearing in mind that we did get that close outside the channel, this is not a class 1 M pattern. Of course, you could see that. But should we get this rolling over similar to the euro and closing outside of that channel, then there's no reason why we can't continue to trade this in a bearish direction. So looking here on the daily time frame, although we are deep inside of an HDC channel at the moment, that is probably going to change as soon as we get a new set of waves. But for those of you also who are trading the WM patterns, we had a very clear class 1 M pattern last week, Wednesday. It hasn't gone anywhere, unfortunately, yet. For those of you trading a hybrid, you may well have got a nice trade in there as well. So, but overall, there's still not that much happening here, and there are certainly nicer instruments to look to trade. Looking at the dollar yen on weekly, still testing that resistance level, so nothing for us to do there at all. And here, of course, also on the daily time frame, much as last week we did break above that most recent resistance level, we don't have any valid patterns and we're deep inside of the channel, so nothing for us to do there. Dollar Swiss, similar picture on weekly. Well, it's certainly deep inside of a channel anyway, so that's of no interest to us. But that push up last week gave us a breakout on Wednesday above both the, or outside of both the 3 and 4 wave channels. So for those of you who are channel traders and don't mind the fact this is not a class 1 or even class 2 potential W pattern to go long on this, you would have been looking to start trading this already on Friday, and certainly looking to do that again today on your lower time frame core strategies. You may well have had an overlay strategy on Friday as well. Right, here's the loonie weekly time frame, also very much deep inside of our channel here. Nothing of interest there to us, but again, dropping down to the daily, nice overlay that we had over here, where we had this reversal pattern kick in on the daily time frame. So those of you who are trading that would have had a nice winner there, which led the market into a class 1W pattern during the course of last week, which even on Wednesday or Thursday, I should say, would have allowed you to get into a lower time frame, for instance, an H4 impulse, potentially giving you a decent trade there. But that is inside the channel. You'd have to be exclusively a WM trader for that. Right, on the Aussie, again, marginal test, well, I would say breakout, but certainly a test of the support level that we've got here on the weekly time frame. Looking at our close there, it was 9951 compared to the low. So closed just on the inside of the low of that channel, and has, of course, bounced back during the course of today at the start of this week. But dropping down to the daily time frame, clearly we did get that bearish breakout of both of the channels through the course of last week. And certainly once you had the close outside of your HTC channel here last week, close of Wednesday, you would have been able to short this or look for opportunities to short this market immediately. And again, as we're seeing today across the board, there's a retracement taking place. But nevertheless, through the course of last week, that was pretty decent price action. And again, looking for a continuation of that at the moment in a bearish direction. Not that we're saying that that will happen, but certainly that would conform to the requirements of our core strategies in the lower time frames. And a similar picture here on Kiwi with the one thing I would say here on weekly, we've definitely got a bearish breakout last week, well outside of that HTC channel. So that's looking very nice. No valid M pattern, unfortunately, certainly not on the weekly time frame. But as you can see here now on daily, once we had the breakout on daily of that channel, and if you're happy with the fact that we don't have a valid M pattern, class 1 M pattern, once you had that close outside, you would have been looking for opportunities to short this market as well. It's certainly one of the nicest instruments to have traded last week, and looking for a potential continuation on that. So if today continues to give us a retracement on this, then we should be looking for the opportunity to trade either a continuation type strategy or else, for those of you who are trading the hybrid, looking for that breakdown and cyclicity on the lower time frames. Right, so that's the majors and minors. Looking across to our yen crosses, not quite as pretty a picture, except for possibly the Aussie and Kiwi yen, as you will see, because here on euro yen, deep inside the channel, nothing of any interest to us there. And on the daily time frame, likewise, you can see, even though we had a bit of a rundown, all inside of the channel, no valid patterns. So we've pretty much left that alone and are leaving that alone for the time being. You might have been interested in trading a class 1 M pattern on Friday, but that didn't go anywhere. Gbp Yen, similar kind of picture, just pretty much all over the place, very much inside of the channel, not really giving us anything here on the weekly time frame that's worth looking at. And here, similarly, you can see on the daily time frame, we do have at the moment a potential class 1 M pattern. It's been in retracement, as you can see, for the whole of last week, so there was really nothing for us to do then. And at the moment, it's not really showing much promise in terms of rolling over and giving us a bearish trade. And again, if you're a channel trader, you wouldn't be looking to touch that at all. The Swiss yen, a little bit more promising. We did, as you know, in the latter parts of last year, get a bullish breakout of the channel, but through the course of the last month, it's pulled back inside of that channel every single week, giving us a bearish candle. So really, again, we've not been able to look at that. And even on the daily time frame, up until last week, where we did get a close outside of the channel, there's no valid pattern there either, unfortunately. And we do have an isolated low here now as well. Now, it may well be that we're just going to be testing this was support in our resistance level. If it does roll over and give us an isolated high here and a potential bearish impulse wave, then certainly you could look to trade that both as a channel trader and with that as being a valid class 1 M pattern. Remember, you'd be using the lower time frames for your execution on that. Right, so Cad Yen, also weekly time frame, not interesting at all. And here, likewise, on daily, not really showing much. As a couple of folks have mentioned, this did manage to stay outside or just below this resistance level, testing inside of it, but closing outside again and again. Today may well change that. Let's wait and see. But technically, is this a class 1 M pattern? Yes, it is. So let's wait and see what happens there. But certainly we have better instruments to trade than that. That's not the nicest picture we've seen so far. Aussie Yen weekly, likewise, not interesting at all. But as you can see, similar to the dollar-based pairs, we've got some trading opportunity, or have had some trading opportunities. So last week, Thursday, we got pretty much a picture perfect close outside. So class 1 M pattern on the close of play last week, Thursday. So folks may well have been looking to short this market. Today's retracement, obviously playing around with that completely and not really giving us much scope to continue. But just pointing out that that was at the time very much a perfect picture. The additional weakness on the New Zealand dollar visible here on the weekly time frame. So still inside the channel though, but it is a bearish impulse wave with that lower low, lower close as of the end of last week. But you can see that additional weakness very clearly here on the daily time frame. Again, today, Monday morning behavior, typical really, showing itself, unfortunately, but very strong class 1 M pattern during the course of last week. So again, and those of you who are trading hybrids or continuation strategies would have shorted this market probably Thursday already last week. And you either were able to hit a take profit on that, depending on your targeting technique, or else certainly have moved your stock to break even. So a nice risk-free trade there. Once again, just a bit of a pity that Monday is not playing ball with us, as it very often doesn't. Right, Euro GBP, not one of the most popularly traded pairs, but we did get that outside close, as you know, right at the start of this year. So we've had that bearish breakout. But over the last couple of weeks, we've had this very volatile behavior with a bullish impulse candle and also engulfing candle, of course. And then last week, going quite a bit higher, testing that resistance level and coming all the way back down and closing lower again, including a gap with the market this morning. So that's what it looks like on the daily time frame. Really, really messy. So at the moment, not really that much for us to do, especially considering that we've got better instruments to trade, but worth keeping an eye on this, because if this relative euro weakness against the pound continues, this could be a nice pair to short through the coming week or even couple of weeks. Euro Swiss here on weekly showing itself to be, and well, no longer to be, certainly in this strong bearish trend that we had throughout the course of the latter half, in fact, of last year. So that's very much come to an end. No cyclicity intact there at all. Not really interested in that. And here on the daily time frame, likewise, you can see that it's just been bouncing around. So not our favorite instrument to trade in any case, but worth keeping an eye on that relative strength and weakness between the euro and the Swiss franc. Similarly for the euro CAD here on weekly, just testing that support level. So any bearish movement for the moment, definitely that has come to a halt. And likewise, you can see how that cyclicity has pretty much come to an end, or looks like it is coming to an end here on the daily time frame. Now, one could argue that this bearish trend is still intact because we didn't get a higher close. That is true, but these closes back inside of the previous or that reference waves price territory and the channel mean that we're seeing really an end to any bearish strength. So not interested in the Euro CAD. Right, Euro Aussie, again, looking at the strength and weakness, or relative weakness of the Aussie and the Kiwi. We're not seeing that much here on the weekly time frame on the Euro Aussie. On the daily time frame, you can see, however, that there was some relative weakness of the Australian dollar against the euro, but nothing nearly as much against our safe haven currencies of the US dollar and the Japanese yen. So pretty marginal. Certainly no patterns that are valid, no valid WM patterns. So pulling back as well during the course of this Monday, back inside of the channel and that previous phase 2's price territory. Euro New Zealand dollar, again, you can see here the more sustained weakness of the Kiwi. Still inside of the channel, but this was a valid class 1W pattern, certainly on the weekly time frame, and folks have been taking advantage of that. So if you trade the daily impulse, then certainly you've been looking to jump into one of these, depending on how strict you are with your execution time frame patterns. So if you're happy to get in on a class 2 or class 3, then certainly you would have had a bullish trade executed on this one. So let's just keep an eye on that as well. Again, remember that the weakness we're seeing on the New Zealand dollar is showing itself better across some of the other instruments, and that's really where you should be concentrating. Right, looking at our GBP crosses now, Gbp Swiss Franc over here again, you can see that there's nothing really doing. The previous bearish breakout that we had showing itself to be a false breakout. Although having said that, we did have something of an established bearish trend on this time frame, but that has very much now come to an end. Daily time frame, likewise, deep inside of the channel, no valid patterns. This is not really something that we're interested in at all right now. And that's very important to remember, folks. Trading is very much about knowing when to do nothing. And hopefully this exercise the repetition of this exercise is driving that home for you over and over again. Right, Gbp Cad Weekly, again, complete mess, to be honest. Very easy just to stay away from that altogether. And here we come again to our GBP and Kiwi against the Australian dollar, first of all. Coming up into this resistance area. So, we were looking obviously last week with a strong bullish impulse candle for a potential continuation of that during the course of this week, and that may well still happen. So this is just the price action of a Monday. It could well continue. So I'm not saying that it will, but it certainly could well continue, and we may well end up with a bullish breakout here. So let's wait and see. In the meantime, however, on the daily time frame, you can see that we did actually get that nice bullish breakout. If you were a channel trader, you would be looking to trade this on Friday already, assuming that you do trade on Fridays. And having said that, though, of course, today you can see this Monday retracement still very much in full force. It may well just be a retracement wave that comes down and tests what was resistance and is now support. Let's wait and see. We, as price action traders, it is our job to see what price does as it comes down to interact with these levels. So one to keep an eye out on for sure. Remember, though, you can't get into too many trades with the same instruments, and we really are looking here, as you can see, predominantly at the Australian dollar and the New Zealand dollar. So Gbp NZD, clear bullish breakout, one of the nicest looking pictures that we've got on the weekly timeframes, and has been outside of that channel now for pretty much for 3 weeks. We're going into the 4th week now. We've had 3 bullish candles in a row, the last 2 being impulse candles. So that all still looking pretty promising. Dropping down to the daily time frame, well, certainly you should have been trading this in a bullish direction already with a daily impulse. But likewise, you'd be able to get all over this with your lower time frame, such as the H4 impulse core strategies, and should have been trading that already. So there've been plenty of opportunities on Gbp NZD to do that through the course of the last couple of weeks. Right, moving outside of those crosses to our more exotic crosses, Cad Swiss, lower volume pairs, nothing worth looking at here on the weekly time frame. You can see how really it's just chopping sideways pretty much. Canadian dollar and Swiss franc showing quite a lot of correlation there at the moment. Aussie Swiss, again, you can see there's been a bit of weakness on the Australian dollar, but really nothing to write home about here on the weekly time frame. It has shown itself by remaining outside of the HTC channel. You can see how these support levels have been broken, but likewise, they haven't really been respected that well as resistance, and we've seen that again now during the course of today. Should we get a continuation of this candle and have this low isolated, it would in fact mean that this was a false breakout, and that would be the end of that bearish strength, at least for the meantime. Aussie CAD, again, Aussie weakness against the Canadian dollar here on the weekly time frame. Yes, we're outside of the channel and have been for several weeks. It's not a valid pattern, but for those of you who purely channel traders, you would have been looking to short this market and should have shorted this market over the last several weeks. So you should have had an opportunity to do that already. A couple of daily impulse trades over here. Most recently, I'd say, was this setup. If you're using advanced targeting on that, then potentially still in that. But also depending on what your trade management techniques are looking like. So we have seen this continued weakness show itself. And at the moment, we're getting that retracement as we're seeing across the board. You can see that correlation showing itself. But again, we want to see what price does as it interacts with what was a support level and is now resistance, going all the way back, as you can see, to early December. So we're interested in seeing how price interacts with this level through the course of today and tomorrow. Aussie Kiwi, so always an interesting pair for me, especially when we're seeing weakness across both the Australian dollar and the New Zealand dollar. But as I mentioned before, we've seen pretty much very clearly that the New Zealand dollar is the weakest of all of our currencies at the moment. And that's clear here as well with this bullish structure here on the weekly time frame, the Aussie Kiwi, relative weakness of the New Zealand dollar. Outside of the channel and have been for quite some time. So yes, we did get a temporary pullback inside of it, but certainly through the majority of January, we have been outside of that channel, giving you the opportunity to look for valid setups for your daily impulse. Remember, again, it depends on what sort of patterns you require for your execution time frame. But the most recent setup, of course, being over here, and that was a class 2 setup pattern. So that certainly should have been taken advantage of. Now, it's last week, it really just went sideways, as we can see, but we are still seeing this resistance level being nicely tested, and hopefully we're going to see a bullish continuation on that. Right, Kiwi Swiss, let's just have a look at the weekly time frame first. You can see again New Zealand dollar weakness here showing itself clearly over the last couple of weeks, which again, if we just drop down here, you'll see that that led to the breakout, a bearish breakout. We did get a setup on Friday for a short for this on the daily impulse. Not doing too well at the moment, obviously, thanks to this Monday pullback. But it is still very early in the game, so let's wait and see what happens there. And likewise here, New Zealand dollar, Canadian dollar, sustained weakness of the New Zealand dollar against the Canadian dollar for, well, 1, 2, 3, 4, 5 bearish impulse candles in a row. So certainly something that you should have been looking to trade, both with using the daily time frame as your execution time frame, as well as using this time frame, which is clearly in a bearish trend, as your selection time frame and dropping down to, let's say, H4 for things like H4 impulse. So I know that that is something that many of you folks have traded as well, and quite right too. So this is probably one of the clearest pictures that we have of the direction of a market with a good directional bias. Again, today being Monday, not really playing ball. Right, so that's the currency pairs. Just looking very briefly at some other interesting instruments that we like to trade. Gold also not doing much really here on the weekly time frame, except of course that last week we had that bearish engulfing impulse candle with the market testing that resistance level and then rolling over very quickly through the course of last week, having come down again and bouncing off of the bottom of our channel. So nothing really for us to be able to do there, but interesting to see that our HDC methodology gives such a good indication of where the immediate support and resistance levels lie. Looking at the Dow, I'm sure many of you folks are aware of the market jitters that have crept in over the last couple of weeks. So here you can see on the weekly time frame how the market has been contained within our HTC channel very, very clearly, in fact, and is staying pretty much range bound by that. And that is really interesting in the context, the wider context of going all the way back to early 2020, where we had this very sustained bullish move. This is the first time where we've really seen such a significant breakdown in bullish cyclicity. Last time being probably all the way back in the September into August, September, October, perhaps 2020, where we did see a breakdown in cyclicity, but there was an immediate resumption there. So this looking far more significant than that. Right, looking at the S&P 500, generally something I'm more interested in. Similar picture, of course, but let's drop down to daily, and you can see how that bearish move over the last couple of weeks has been really, really significant. And again, not something that we've seen for quite some time. So this is quite significant, to say the least. Well, let's wait and see. Remember, we don't second guess the markets, and folks who try to do that will sooner or later get their fingers burned. But there's certainly nothing bullish about this market at the moment. That may well change, but there's a lot of work to do before we could look to trade that in the bullish direction. And the same goes for probably our primary bellwether instrument, being the Nasdaq. Similar picture on a weekly, of course, a slightly wider HTC channel, but again on the daily time frame, a very similar picture. So for those folks who are trading the channel breakout, certainly if you're trading the indices, there were plenty of trading opportunities when the bottom of the HTC channel was either there or there. You should certainly have had plenty of opportunities to short this market on the lower time frame strategies. Right, looking at oil, still seeing on the weekly time frame this extended bullish move. And looking like this on the daily time frame, very much outside of the channel, valid W pattern. Certainly, this is a tradable picture. Seeing a bit of weakness creeping into the market in the latter part of last week as well, which goes hand in hand with stock market weakness. In fact, it's surprising that oil has held its end up so well in terms of this bullish move through the course of last week. We are seeing a bit of a struggle though with this resistance level. Much as it's managed to get above it and close above it the last few days of last week, it's not looking very convincing at the moment, and the quality of this move has deteriorated, with certainly the last 2 days of last week failing to give us impulse candles. In fact, during the course of this bullish impulse wave, we've only had one impulse candle, and you folks know what that means in terms of quality. Right, so just a quick look here at crypto. It's certainly been something that more and more of our members are starting to trade, certainly if you have got the right broker to do it. And you can see here, even though we're very much inside of the weekly HTC channel, we've got a very strong class 1 M pattern on the weekly time frame, and we've had trending conditions on the daily time frame as well, although that temporarily has broken down, which is why we are back inside of the HTC channel again. But there certainly has been money to be made during this time period where we've seen the cryptocurrency markets coming down. Right, so that's pretty much it, folks, from me. We will start looking at some other instruments as well over the course of the next few months. But as always, if you've got any questions, please pop them into the chat below, and I'll be happy to answer it. All right, folks, well, that's it from me. Enjoy the week's trading. And please remember, if you do not yet, or if you're not yet subscribed to our channel, please make sure that you do so. We are going to be bringing out professional trading and getting our agenda going for the new year soon. Right, I'll chat to you all soon. Bye for now.